Welcome to the Jay Kim Show, Hong Kong's first dedicated podcast on investing in Asia. Join us as we survey the land and discover the greatest companies and most profitable investment opportunities in Asia. If this is your first time listening, thank you for stopping by. This podcast is produced every week with the goal of providing actionable insights to you, the listener, with every single episode. And now, on to the show. Today's show is all about gold and precious metals. Our guest this week is Chris Blasi, who is the president of Neptune Global Holdings. Chris has been in the precious metals business for nearly 2 decades and gives us some great insights into precious metals as an asset class and why he believes we are still in the middle stages of a large secular bull market in gold and precious metals, with the greatest gains yet to come. We also talk about asset allocation and his views on cryptocurrencies in general. So if you're wondering what allocation your personal portfolio should have with gold and precious metals, then this episode is for you. Let's get right on to the show. Hi, Chris. How are you doing? Welcome to the show.
Jay, how are you? It's great to talk to you again.
Yeah, it's been a while, and I'm interested to get you back on and talk precious metals since you are the sort of my go-to foremost expert in the space, and there's a lot of interesting things happening there, and I think that a lot of investors are pretty interested in some of these moves we've seen recently. So maybe for the audience listening in, you could give us a little bit of an introduction.
Sure. My name's Chris Blasi. I'm the president of Neptune Global Holdings, and also known as Neptune GBX, which means Global Bullion Exchange. Just a quick overview. We started as a regular full-service precious metals dealer back in 2002, so we've been in this for 16 years. Basically, every step along with this secular bull market that we believe began in 2001. And we have differentiated ourselves, even though we do provide all the traditional products for our clients, the bars and coins, but we've kind of differentiated ourselves with some very unique physical precious metals offerings that actually have received patents, but kind of stay true to physical precious metals ownership. And, maybe we can touch on that a little bit later. But I always enjoy chatting with you, Jay, about the precious metals market and what's going on at the macro level.
Yeah, absolutely. So, and maybe if you could give a little personal color, have you always been in this space, and was the reason that you decided to start or join Neptune because of the secular bull market that you just described?
Yeah, thanks for bringing that up. So one thing I like to say is I do have a little bit of a diverse background, which I think all plays into kind of understanding precious metals and not just saying, here's an individual who's only being in precious metals, so his view is very limited, right? I started with the traditional big broker-dealer, Wall Street broker-dealer, right. Also went to a niche M&A firm, merchant banking firm. So I was kind of in those traditional Wall Street roles. I did spend also a period of time in big technology, without naming the name of the company, but I was involved with all the financial service firms, and this was one of the major players. But I was always a student of macroeconomics and trends. And in the late 1990s, through my own research, I was convinced that we would go into, in the new millennium, a protracted secular bull market in the precious metals. And I was so convinced that this was going to be real and would materialize that, from year 2000, 2001, I put all the ducks in a row and launched Neptune Global in 2002. So, that's why I got involved in it. It's not by accident. It was by research. And, I'm happy to say that, despite the normal ups and downs in this market, that is, it's actually playing out exactly as the research I conducted over a decade and a half ago, told me what was going to happen. So it makes me excited. It also gives me a level of confidence when talking to investors and clients.
Oh, absolutely. I mean, it's interesting because in financial markets, people like to try to predict trends, and it's difficult to do so. There's a handful of people that are able to spot them and make big bets, and it clearly seems that you've successfully done so. So perhaps Chris, you could shed some light on sort of the broad overview. I mean, you stated that early 2000s is when this sort of secular bull market began. Where do we sit on that in that trend right now, or is it too late to get in? This sort of thing. Maybe you could give the audience a quick overview of what we're looking at right now.
Sure. As I stated, I saw and through the research that we were going to go into a secular bull market, right? And we need to separate and just clarify secular versus cyclical, right? Cyclical could be very short term. There are multiple cycles within a secular. A secular bull market runs long in duration, right? Like 15 to 21 years. And it's basically characterized by three major legs. The first leg is up. The second leg, and these are multi-year legs. The second leg is pulls back and is multi-year and basically does a retracement. Basically 50% of the gains are given back. And then the third leg is the most robust, where the biggest gains are made. So where are we now? The secular market this bull market started in 2001, ran from basically 2001 to 2012, where gold started at $255 an ounce at its absolute low in 2001, up to, we know, that little short-term peak at 1900.
Right.
Then gold did that second leg, pulling back literally to the dime, giving 50% back as gold dropped into 1,030. And that ended in December of 2015. And we resumed and we started this third leg and literally day one of 2016. So we know 2016 and 17 were both up years for gold. And we believe this will be, in the next few years, will be up years, and the biggest years lie ahead. And just to clarify, when I say gold, that is kind of just the word for the precious metals in general. Gold isn't going to run and the others being left behind. And just to say, to your point, is it too late to get in? Absolutely not, because the third leg has the most upside, and we're in the very, very early stages of it. So that's our view.
That's a great overview, and I wonder if I might be able to pull up a chart or something when we post this live, so our audience can actually visually see where we are on that outlook. So it seems like a pretty exciting time right now. Obviously the price of gold has been, even in the last couple months only, has kind of fluctuated, sort of between the 1,200 and where it is now range. There's a lot of gold's an interesting one as an investor, because it's one of these asset classes that, from a general asset allocation standpoint, I think that all investors should have some sort of gold. Physical gold, in my view, is probably the best. And maybe you can talk to us a little bit about sort of the physical versus the exchange traded sort of instruments, and what your view or recommendation is there.
Sure. So a couple things. One thing about being a gold investor, you really have to have some grit. And what I mean by that is, most investors, unfortunately need the crowd to give them the reassurance that what they're doing is right? That's why the crowd all moves together.
Yes.
Right. And, this is typically why, the small investor buys and sells at the wrong times, right? When they finally get full confirmation that everyone's in, they buy at the top and sell at the bottom. So what's tough about being a gold investor, why, these are a separate group of people. You're making a decision based on your research to go into an asset that has proven itself for 5,000 years and without dispute. But you're not going to get cheerleading from the mainstream. I mean, you're not going to turn on, MSNBC and CNBC and being told how smart you are. You are going to be, denigrated for all intents and purposes.
Right.
And when you talk to your typical financial planner, or, the direction that, most people are taking, if you really insist on gold, of course, they're going to kind of shoehorn you into an ETF. Now,
that's right.
Problems with and the problem with ETFs are, they're not all created equal. So, some are we'll say, less of a play on gold, the big 800-pound gorilla is GLD, right? Well, just
Hmm.
look at their prospectus, right? It says it's there to track the price of gold, and it talks about holding gold in unallocated form. And you can parse all that, and what it's basically telling you is, they've obviously used derivatives. They have all sorts of caveats should the market run away on them. And at the end of the day, you don't own gold, right? They
Right.
present it as something that's convenient. It's something that supports the typical wealth manager, broker dealer, financial planner because it keeps it within the exchange. But since precious metals are literally the only unique asset that you can actually own directly, right? Like if other commodities, if you like oil, you can't put a big silo in your backyard and put, a million gallons of oil. You're kind of forced to use exchange traded products.
Right.
But here's this rare, unique thing where it says, look, you can separate yourself from Wall Street, the exchanges. So my point is always, why would you give that unique benefit up of owning the actual asset and not having the counterparty risk associated with an exchange or a financial instrument between you and the underlying asset? So even though maybe it's a little more cumbersome, I think it is, it's in definitely the investor's best interest when it comes to the precious metals portion of their portfolio to stick to the physical and the real physical.
Yeah, I've done a little bit of research, but I think that I have to agree with you there, Chris. And I think that it's kind of worth going through that process. Just for I personally, I actually don't own any gold, and I personally have done a little bit of research recently, actually, because I do think that it's an important part of every proper asset allocation strategy, and I've seen sort of allocations from, I mean, obviously if you're a gold bug and this sort of thing, it could be as high as, I don't know, 25% maybe. But for even just the average investor who's looking to diversify, I've seen somewhere between whatever 1 or 2% and upwards to 5 to 10% of your portfolio, depending on your comfort level. As far as storage goes, what are some quick tips there? Are there certain things to avoid, pitfalls that you need to be aware of? Obviously, your company as well provides storage services, right?
Yeah, and we do it in conjunction with a major non-bank bullion depository, and that's a key, non-bank outside the banking system. And what we're able to do, a couple great things because of this partnership. It also serves as a check and balance, right? So when our clients buy and sell precious metals with us and they opt to store, of course we do delivery also, but for those that opt to store, which are many, they get their transaction confirmations from us, but they also get, once the metal is delivered into the depository and it's, allocated into a special allocated account and in the client's name, the depository confirms with them directly. I mean, that's a unique relationship that we've been able to forge with our depository. So you're getting all these checks and balances, right? And that's important, right? We want that transparency. And also we get a very, very aggressive storage rate from them, which we pass on to the customer so that storage does not become a deterrent. And that rate is basically the same as what the ETFs charge on their management fee. So you're not saving. If you say, well, I'll avoid storage by buying GLD, well, basically the rate they charge, and of course they can't invoice you for that. They just keep reducing the share price, right? They kind of liquidate. We do an invoice, right? But at the end of the day, if the cost of storage through us is basically the same as your fee to the managers of GLD or SLV, we think, why would you not want the asset?
Right.
And the other thing, like I said, we do metal for delivery to people, and that's great. But what some people forget is when it's in your possession, when you want to sell. So when, the precious metals really hit their stride, and they're going up. They have been the last few years. I mean, gold was up 12% last year and 16% the year before. So you can't say the precious metals investors aren't doing well. But when it's time to sell, when you want to take your profits off the table, when it's in storage, it's just a phone call away. You call up, you sell, it's all locked in, T+2, we're giving the funds back. If it's in your possession, you have to get it back to market. And realize you're talking about big, bulky, and not inexpensive to ship because insurance is obviously a big component. So people should think this through, and especially if their time horizon for going into the precious metals is to buy, hold, and probably sell out in a 2 to 3 year time period, waiting to hit a price target. The storage and the ready to sell and ready to lock in is something to seriously consider.
It does make a lot of sense. I think that all of us as investors, it's both the exciting part of being sort of a multi-asset investor, and the tedious part is keeping track of all your positions and reconciling all your balances. And there's software out there. I use a Excel spreadsheet, but it's part of it's fun. The fun part, looking at sort of the different assets you have and rebalancing and this sort of thing. But also, as you mentioned, the part of it is tedious, trying to keep up with the bookkeeping and not for nothing, like you said, when you have to trade that in, it is tedious and cumbersome, and you have to ship it in or find a dealer that'll take your precious metals. So I can see the value in the storage. And so just logistically, if let's say I were to want to buy some gold bullion from you, Chris, from your company, would I just there's an application process, and then I just wire in the money and then get an account and get set up that way?
Anyone who wants to inquire could either go to our website and click on contact and request, or to call us. And we actually send out 2 emails. Our customer service people will send an account opening form with some simple instructions for setting up. And the other one is frequently asked questions, which is generally, we believe, very helpful to anyone who's new. And all the typical things someone who's new to the process usually asks. So this way, if a customer calls us and doesn't think of something, we kind of be proactive. And then accounts are funded by bank wire 90% of the time because they're fast and expedient. They could also fund it by a check under certain, up until certain amounts. So both, and once that's set up, the client is ready to trade. And you also want to point out, when you talk about record keeping and such, we have a client login on our website. So clients that have metal in storage, right? So it's not for clients that have metal shipped to them. But once that metal's in storage, a client logs in. It's going to show what their whole portfolio is. So if they have multiple precious metals products, it's going to show the current market value of each product plus the total portfolio. And it's also going to show the transaction history. And, it's very storage centric. The history of the dates it went into the depository, the dates any metal came out, what the circumstances are coming out. Was it for sale? Was it for delivery? So to aid the investor, right, as you talked about, looking at all your portfolio, tracking them, tracking history, at least for the precious metal side, we have those tools that people are used to with any account they would have with a traditional broker dealer. That sort of transparency and access.
Right. What sort of, and I'm just saying this broadly, not specific to your company, but broadly, when you're talking about physical gold and storing it in, say, a vault or a facility, what sort of insurance or assurance do you have that, what happens if the company goes bankrupt? What happens to your gold or this sort of thing? And I mean, I think it's a question that lingers in the back of novice gold investors' minds before they jump in, right? What happens in the worst case scenario?
Those are really great points to raise. First thing, we are not the depository, and obviously this metal is not on our balance sheet, as they say. The depository the one we use is IDS, International Depository Services. That's our primary depository. It's a major non-bank bullion depository, and if a person asks for the frequently asked questions, when we email, we have the link to their site. They are fully insured, and we're obviously are always receive their letters of evidence of insurability. They are an official depository for exchanges like COMEX, LBMA, and it just means it has to do with when you're storing metal related to the LBMA or the COMEX or something, that they meet all these standards. And they are audited continuously because of that. So they're like I said, a major depository. They actually have 3 facilities. They're also the custodian, the depository custodian for almost all the IRA companies use them. And that's a heavily regulated industry. So that's why we work with someone like that. We don't work with a mom and pop, and that's not denigrating them but it's just that we're more comfortable, the firms that have to meet certain standards, regulatory standards, even though they're still outside the banking system, but, holding all this IRA money and metal and such, and, carrying the insurance in the hundreds of millions of dollars. That's where we're more comfortable. And we believe our clients would feel that way also, and they do.
Right, absolutely. So, what would be your sort of broad strokes recommendation for an investor? And I'm sure you get tons that come to you seeking sort of portfolio allocation advice. I mean, everyone knows that diversification is important in one's portfolio. If I were to ask you, hey, Chris, I'm looking at my portfolio overall, and I have X amount in stocks and X amount in bonds and real estate and this sort of thing. What would be a good starting point to start building a precious metals allocation in one's personal portfolio?
Sure. So when you actually touched on this right about a couple minutes ago, when you talked about what percentage of your money's in precious metals. And, that's a little bit up for debate. I know there's the textbook, 5 to 10%.
Right.
And these are my personal opinion, right? So a person can digest it and take what they think.
Right.
When a person's talking about, a great example is 2008. Precious metals rose going into 2008 because the precious metals, and we'll just say gold, representing the precious metals, is a very good forecaster of what's coming up. And a lot of people don't realize that. Gold moves ahead of the event. So gold's rise before 2008, when everyone thought we were in a new economy. Remember, we were in a housing economy, and of course I'm saying that sarcastically, right? That ninja loans doesn't matter, just, give a mortgage to everyone, and all this stuff created by Wall Street CMOs and CDOs. Well, that completely blew up. And the precious metals world knew that. And that's why gold basically rose for years prior, and of course through that event. Now, when that event happened and the stock market was cut in half or 40%, right?
Yeah.
The precious metals continued to rise and they outperformed. So my point is, if a person had a 1%, 2%, 3% position in precious metals and a 97% position in a market that gets hammered, it's nice. How much is it really going to help you? My point is, I've had people say, well, I have a $500,000 portfolio and I've got, 200 ounces of silver, right? At $3,200.
Right.
It's nice. It's not going to do anything for you at the end of the day, right? It's
That's
just
true.
When I say not do anything for you, I mean, if you're looking for it to be kind of a counterbalance, it's not enough there to do anything. So my point is, the position needs to at least be relevant enough so that the reason you're buying precious metals, right, as that store of wealth through market disruptions, which most people feel is long overdue, our next 2008 repeat, and many feel that when the next version of that will be far worse. Well, you need to at least have a position that is going to be helpful, right? And that would be without putting myself on the line and being accused of, right? Hey, I still have to play it, proper.
100%. 100%.
We make a market and we're here to serve the investors, but it's just food for thought that it needs to be at least relevant enough to do its job.
Right. We won't hold you to anything that you've just said, Chris, but we appreciate the insights. No, I totally agree with you on the there is a point of diversifying, and that's also a dangerous road to go down, because as investors, you kind of get the shiny object syndrome or whatever it's called, where you think everything is, all these little opportunities, maybe one could pay off, but you get to a point where if your bets aren't sizable enough, then there's really no point. You can make a 1% investment into something that 3 to 5x's, and that's still it's great, but it doesn't really move the needle. And so I would argue more towards the side of doing some deep research into several areas and making some concentrated bets, and just raising your conviction level with each of the different areas. So
yeah, and if I could I just have to elaborate because you articulated it beautifully, Jay. But and the truth is, the joke is you can diversify your portfolio where everything's offsetting each other to the point where you're just going to sit in the middle. You might as well be in a money market account, right? I'm being a little sarcastic, but if everything is designed ultimately, well, if this goes up, this goes down, and vice versa, then all you're going to do is pay fees to whoever is managing the money, and you're not getting anywhere. And I don't look at it as placing bets, and I also don't believe personally it's very difficult for an investor to nimbly trade markets. I don't think it's possible. It's like may work for a short period of time, it'll eventually blow up. What I believe is an investor needs to identify the big trends and then get properly invested and let that trend push you, because we're not, even more so in the stock market, right? Picking individual stocks, unless you have a lot of money and can truly buy at least a fair number of different stocks, most investors are served better by a mutual fund by nature, right? But those mutual funds, they just move up and down with the market, right? They're, if the broad market goes up, they do well, and if down. So, my point is find what trend is looks like it's developing or in play and has some legs to it, which we believe precious metals do, and then take that position in there. And then, you got to ride it, got to spend a little bit of time. You can't get spooked out of the market in 2 months, and that's the other challenge I think some investors have.
Yeah, absolutely. I mean, it's classic sort of, on the stock side, it's classic sort of Warren Buffett versus some of the more active managers. And when you expand that time horizon out and you look at performance, then it's quite telling that that active managers actually don't end up outperforming. I wanted to dip our toes really quickly into quite a buzzy, hot topic these days. Being someone as yourself, someone that's deeply rooted from the sort of precious metals and commodities space, I wanted to ask just quickly your thoughts, without going into too much of this rabbit hole, on cryptocurrencies and Bitcoin. There's been references or people have compared it to sort of digital gold and sharing some of the same characteristics that gold has. As someone with your background and this sort of thing, what are your overall views on crypto and Bitcoin?
Okay, so since we need to keep it relatively brief and the subject is absolutely enormous, right? I can only touch on a couple things. So maybe these will be helpful, and maybe we can visit this in greater detail in another conversation.
Yeah, sure.
One thing is, because Bitcoin or digital currency is technology, and a lot of people don't understand technology, and some people I think they understand it, and I don't think they really do, is there's a lot of mystique or mystery, and I think people forget two things. Blockchain is a platform. Bitcoin or cryptocurrencies use that platform. They're not the same. They conflate the two, right? They use interchangeably blockchain, Bitcoin, crypto, blockchain.
Right.
The analogy is the internet is a platform. Companies use the internet to transact or put their business model on utilizing the internet. So they're two separate things, right? All because the internet is viable doesn't mean using it for your business makes your business viable. And people forget that, right? Because if you say, blockchain is a very robust early stage technology, it's obviously in the developmental stage, and it's going to be used and manifest itself in a lot of different ways through contracts, and there's going to be proprietary versions for industries and companies to do their own business. Cryptos are just using blockchain, and I think people forget that, right? So then after that, these are still software, right? Even using just the kind of ubiquitous term technology is a little too broad. It is software, and you have to be cognizant that it's going to have the same challenges software has. I mean, Bitcoin's already proved that, right? Bitcoin didn't scale 3, 4 months ago. And developers had to come in, right? They talked about that hard fork. Well, if you're honest with yourself, you step back and say, well, who are these developers, right? I mean, who's the guy going to come in with the white hat and constantly, make the necessary upgrades to this software? I know people get upset when you say that, but it's a fact, right? And my point is, it's not to say yay or nay. It's just to say, understand what you're dealing with.
Right.
And it still has to be constantly developed. That means human intervention is always coming in. Who are these people, right? Who's this so-called group that comes in and fix it? And I know, you'll hear, and I hope people don't get their nose out of joint, but you hear them talk about well, just like these user groups, right? They do it and it's all kind of like missionary work. But I don't buy that, right? And even if that's true in the early stages, what will happen in the end? And if it's just an open-ended group, who could stop any nefarious person from getting involved? So my point is, I think digital currency is going to be around. It doesn't necessarily Bitcoin. It will be Bitcoin. And it doesn't necessarily mean Bitcoin's going away, but it doesn't necessarily mean Bitcoin's going to continue to rise. And cryptocurrency, in some respects, can't identify itself, right? It says it's money, but it's so much volatility, you can't, as a vendor, right? If you're in business, you really can't accept it, right? The ones that accept it are immediately converting it to dollars, because you take us, right? If we were paid in Bitcoin and we shipped you, gave you all this gold, and next thing you know, Bitcoin drops $2,000, we're going to be out of business, right? Because our margins are razor thin. So my point is, when the vendors that say they accept it, they turn around and immediately have to convert it to dollars. That's kind of fake, because that isn't really a currency, right? If you have to convert. So, and then is it an asset? So my point is, it's not going away. It's not blockchain, all because blockchain is developing. That's, the issues with crypto is totally different. One just uses the other. Keep that in mind. It is highly speculative, but to the point that I guess really hits home, is Bitcoin or crypto the new gold? And that is flat out just wrong.
Okay.
Because if you really think about it, the only commonality they have is that they're both considered outside of the mainstream, right? Outside of the quote unquote system. And don't get me wrong, the idea, in theory, of a currency that could truly operate freely outside of the control of central banks and the Fed, I think is the greatest thing in the world. I mean, I would love that. I would love to not have to deal with banks and them thinking they're doing you a favor to have an account with them and charge you astronomical fees like wire fees, right? What's a wire, right? You're sending data and they're charging, what do they charge individuals? $30, $40 on an international? Yeah. That's a lot of money. So no, I would love an alternative, and people should not get upset to understand I'm in the camp of show me a viable alternative to the banks. It would be the most liberating thing in the world. It would free the economies of the world. But I'm still would be cautious about putting too much money in cryptos. But as I said, they're the polar opposites, though. I mean, digital currency completely exists in cyberspace, right? Physical precious metals, you can drop and break your toe. They're different, right? One is relying on technology and everything around that, upgrades to software. Technology changes so rapidly, the platforms change. People have to understand that systems work differently when there's even changes in the CPUs of the future. I mean, there's so much that affects something that relies on technology. And precious metals, gold mined 5,000 years ago is the same gold. No one had to do anything for 5,000 years, right? An ounce of gold, an ounce of silver is exactly that, which is the polar opposite of what digital currency is.
Yeah, absolutely. I two thoughts after what you just said, and thanks for sharing those views, Chris. I think it's important to hear all sides. People get caught up a lot with what hype and this sort of thing. And I think that your first point of just educating yourself is the most important thing. A lot of people are jumping into this asset class, and whether it, I know a lot of people personally that have made a lot of money in crypto, and they know nothing about it. And so it's kind of like, oh, well, who's right? Well, it's not about right or wrong at the end of the day. It's about knowing what you're getting yourself into. And doing your research and being comfortable with the asset class. And I think that you're right. For the large majority of people that are involved in it don't actually know the technology of it or the underlying technology and this sort of thing. And secondly, it's just funny and interesting to me that people would rather jump into this sort of asset class versus a gold that's, like you said, has been around for 5,000 years and it's proven its worth. But that's just the way people are. And the average retail investor is Mr. Market thinks differently. So, hey, well, it's going to be interesting to see how this whole thing plays out. I do agree with you that it's going to be around for a while, and it's not going to go away. But I think that at some point it'll be interesting to see how it plays into a broader asset allocation strategy. As far as diversifying and picking asset classes. So let's see how that pans out. Chris, there's a last couple questions I wanted to ask you as we look to wrap up the discussion, and it's been great catching up and hearing your views. So first of all, I wanted to just ask: we established before that it's not too late to get into precious metals, and so we're sitting at sort of the early days of what I believe you said was the third leg, which is the strongest leg of that secular bull market, which is exciting. So what is your sort of short-termish outlook in the next 12, 24 months of precious metals and gold? And then after that, I want to talk about the PMC Ounce, which is one of your special products that I think that listeners would benefit from.
Sure. So as our observation is, we believed, this third leg started 2 years ago, and this is going to be a multi-year leg. And when I say multi-year, I'm probably talking more in the range of 7 years, right? So we've got a number of years in front of it. Gold and precious metals will always be hit. And there's a degree of manipulation on the short to intermediate term. And that's what can really be very successful at dispiriting investors. So unlike a few years ago where, even us here, we knew it was in leg 2 and the trend was down until it, kind of hit that 50% retracement. Well, now we feel, and we did, that once that 50% retracement was achieved, we would go into the third leg, and it has, and we're in year 3. So my outlook is, despite a day like today where the metals are down, is it will be grinding higher, and over probably the next 12 to 18 months, it'll hit an acceleration. I'm not saying to wait 12 to 18 months to take your position. I'm saying it'll start accelerating at a greater trajectory than now. But I'm going to share one other thing, Jay, that hopefully will help investors see something experience something that I see. There are different products in the precious metals market, meaning, let's take gold. Gold comes in coins, right? Eagles and maple leafs, and then small bars. Mm-hmm. And the bars go from 1 ounce to 10 ounce to kilo, right? The kilo is the 32.15 ounces, basically, in about $45,000 in today's market.
Right.
The kilos are basically bought by bigger investors. That market, so big investors, like if you're investing $10 million, you don't buy gold eagles. You don't. You buy kilo bars, right? You're still having hundreds of them,
right?
But because you don't need something that's as divisible as $1,300. And of course, the sovereign wealth funds and and those big Asian, you hear about the money flowing to the east. They all want kilo bars, right? Not the individuals on the street, the power players. Now, from what we've seen over the last few months, and I'm saying this about 5 months now, the kilos are hard to get. There are none in the secondary market. Secondary market means something that the refinery sold in the past, that investors sold back into the market. Guys like us buy and then can resell. There's nothing. And we're getting, and the kilos coming out of the depository, out of the refineries, they're coming out really slow. which tells you the demand by the bigger money crowd is strong. They don't care if gold is down today. They're not selling and they're accumulating. And conversely, the classic retail products, gold eagles, maple leafs, there are tons of them.
Right.
A lot of a lot in the secondary market, which tells you retail investors are either, selling or not buying. So I look at it in my perspective is, and I hate to use these terms because it don't mean to be, it's not to be not kind, but you would call it the bigger players, the smarter money whose connections have a little bit more insight to understanding where things are going, aren't selling anything and are just accumulating. And the folks that will get spooked out of a market, because even though gold has been going up for 2 years, the market gets hit at a time that just kind of dispirits them and they throw in the towel. Or they get anxious and they get sometimes greedy and they say, well, I'm going to go switch to crypto, or I'm going to, they're changing gears too quick, right? They don't establish, make their decision and stick to it. So I think if it could be a helpful message to anybody from our perspective, from the flow of the metals based on metal type, this is the time you want to get, is a good time to either establish your first position or build on what you have. So that, that's one insight I hope would be of use or helpful, or at least interesting for your listeners to digest.
That's very interesting, Chris. Is there a spread? As in, let's say I had $100,000. Would I be better off buying 2 of those large bars than a bunch of maple leafs or whatever? You know what I mean?
Sure. So, yeah. So if you're going to just do gold, Jay, it still isn't. And I'll tell you why. Because you want the divisibility, right? You're going to pay a little bit more for the coin, but it has its value. I mean, I would say if it's going to be in storage, you go with 1 ounce bars, right? Because you're going to get a lower premium than a coin. It's in storage. And you want that divisibility because the reason divisibility is important, right? Say, you look at what a lot of very, very smart analysts are saying. They're saying, look, in the next few years, gold is going to be, up to 2,000, 3,000, and it's going to achieve, a lot of people will see gold at far, far above $5,000. And as an investor, there are times when if you don't want to be greedy, you want to start taking some profits off the table, right? You may not want to get out of the investment completely, right? Because you don't want to miss more of the upside, but you say, hey, look, I'm not greedy. I'm not a hog, right? I'm going to start taking. Now, if you have $100,000 and you put yourself into only 2 units, you basically have to sell it big, right? So you lose a lot of that divisibility where, as things are going up, you may want to just sell 5 ounces at a clip, 10 ounces, especially if gold's at $5,000 an ounce, right? 5 ounces is $25,000. So I would say the kilos really make more sense when a person has got hundreds of thousands of dollars that they're putting into gold. $100,000 is a nice investment, but it's still, you want the divisibility of the smaller units.
Right. And with the strategy to accumulate, let's say you're just starting to build a position, is it the classic, like parents tell you to every month just buy a little bit of gold and just do that for a while? Or is it wait for a pullback and then try to build a larger position and go that way?
Sure. So in a little bit, we're talking about 2 things, right? One is market timing, right? Waiting for the pullback.
Yep.
I've rarely seen that work because the psychology with a pullback is if a pullback happens, then the person is convinced it'll go lower. It doesn't,
right.
And it goes higher. I would say this is what the reality is. If you do your homework and you concur that the precious metals are in the early stages of leg 3, and if I was to say to you, so Jay, where do you think gold is going to be, 3 years from now, 5 years from now? And you say, hey, Chris, I listen to a lot of guys who are pretty smart and they're saying 5,000 plus. My answer to you would be, then what are you going to do? Hem and haw to maybe gold goes down $1 an ounce? Right. It's more likely to be up 5. Just establish your position. Because the other problem is when the next crisis like 2008 happens, the supply will be just totally dry up. Mm-hmm. And it did in 2008. It was very tough for a couple of days to get anything.
Right.
So you run the risk of just being shut out. because it is true. It's not paper. It can't be created out of thin air. There is not an infinite supply of precious metals.
Right.
So my position is, just take the position and don't even waste your time trying to market time. But I'm going to use that as a cue to kind of just talk about something that we offer, because Jay, the beauty of it is it's a patented physical precious metals asset called the PMC ounce,
Yes.
which means precious metals composite. And each PMC ounce has a fixed fractional amount of gold, silver, platinum, palladium. And depending on how many PMC ounces an individual buys, those fractional amounts aggregate up to a total. And actual physical bullion is delivered, good delivery physical bullion, into a storage account, into the depository, into the client's name. And it contains, each PMC ounce is a fixed amount of gold, silver, platinum, palladium that are logically weighted. So each PMC ounce in and of itself is a turnkey diversified physical precious metals portfolio. And the logic of it is, and this logic is proved out, because you can look at our homepage, because we have the history of the PMC ounce's price versus gold and silver since the PMC ounce was created in 2008, is that it gives a better risk-adjusted return. It mitigates the volatility that is common if you're in just one or two of the metals. So it's capturing the blended return of all four metals, and it's smoothing out that volatility. One of the greatest examples is silver. Silver spiked way up to almost $50 an ounce in 2011 and 12, and now is way down at 16. A lot of people aren't aware that in the last 3 years, the best performing in the precious metals are palladium.
Right.
But virtually no individual investors have any position in palladium, because a typical precious metals dealer is pitching gold and silver. So this is a product that, like I said, it has a patent. It is all physical precious metals. It's not an ETF. It's not a fund. It is unique enough that that's why it has a patent. It's bridged the best of two worlds, the ease of trade like an ETF with actual physical bullion ownership. And it's logically diversified. So when you say, how much should I put in the precious metals? And then people also start questioning which one.
Right.
We basically say the PMC ounce has done it for you, right? And there are times when gold and silver are down and platinum and palladium are up. So we think it's logical, and the more as investors get exposed to it, most of them gravitate toward it because the logic is just indisputable. And we have a lot of tools on our website, which is neptuneglobal.com. We have a PMC calculator that lets you do a mock trade, so you see exactly what you're buying, how your money is diversified across the metals, based on dollars and percentages. An interactive chart that's updated daily based on the closing prices that shows the performance. So, we think, and it is proven, that it is a robust, logical, physical precious metals asset, which is actually resonating with a lot of the new people to precious metals, right? They're used to wanting diversification, having something that's a little more, we'll say, a little more creative than just, kind of the old bars and coins, which have kind of a, antiquated, barbaric feel to it. And it's gotten wide acclaim by some very respected analysts.
That's pretty interesting and exciting. Can you divulge the weightings of the PMC ounce and how you came up with those? And are those fixed, or do they change over time?
Sure. So the physical weightings never change. They can't, right? So you think the ounce is like a pizza with slices, and one slice is gold, one is silver, one's platinum and palladium, and each slice is a certain size.
Yeah.
Now, the reason you have to visit the site is because there's two ways of looking at it. There's the physical amount, and then there's how much, because each metal has a different valuation, right? Like, gold is $1,300 and silver's $16. So when you really look at how much money and how you allocate or weight, you have to look by how much money is going into each metal, not units, right? Meaning, if you had $100,000 and you want to put half in gold and half in silver, what would you do? You'd buy $50,000 in gold and 50 in silver, right? You wouldn't buy 1 ounce of gold for 1 ounce of silver because they have a ratio of 80 to 1 virtually. Right. So the PMC ounce has that physical weighting, which is fixed. So a PMC ounce sold 5 years ago is going to be the same as one today and 5 years from now. The thing that's just changing is its valuation as the value of each component metal changes.
Right.
And this product is tied 100% to the market. Every tick change it is reflecting it. It is a true live market product that is bought and sold in real time. So the physical weighting is gold is 3.5%, silver is 93.75%, palladium is 1.75%, and platinum is 1%. Now, you would say, at first blush, you say, well, that's all skewed toward silver.
Right.
But it's not, because based on that weighting, the PMC ounce today, that 3.5% of gold represents 51.5% of your money is going into gold.
Right.
Because gold is 3.5% of an item that's $1,300 and change. So you can see the logic. Right. It is predominantly still gold. Gold is the primary. Now, all that silver, like I said, 93.75, do you know how much that represents of your money? 17%. Because silver is so low price, so undervalued. So my point is, this is why we have all the tools on the site. And the PMC calculator, which is accessed through the homepage, it lets you do the trade, fake trade, but it's all in real-time pricing. It shows you how much of each metal physically weighted you're owning, and how much of your money percentage went into each metal, and you see the whole logic of the diversification. So that's why, love to explain it, but the tools and the feedback has been very positive that, people who are doing their due diligence and their investigation utilize the PMC calculator, and they're like, then they can totally conceptualize it. So, I would just encourage anyone who's interested to visit us and check it out.
Absolutely. We'll get that link in the show notes at the PMC calculator and of course your website. And that leads us to the last question, Chris, which is, what's the best place to find you or follow you or connect with you if you're interested in perhaps purchasing some of this PMC ounce?
Sure. So I'd encourage anyone to go to neptuneglobal.com, right? www.neptuneglobal. There, of course, you'll find our phone number, which we encourage you to, don't be bashful, call in. We're happy to chat. Also, you could hit the contact tab and just request information. And, we'll start with just, if you hit the contact tab and request, we will send you the frequently asked questions. And those will give you a direct link to the PMC calculator, the page that gives you an overview of the PMC ounce, even things like, what are minimum count sizes, the link to the depository, a lot of things that we think are a great, helpful starting point. So pretty much the centralized place for getting to know more about us is neptuneglobal.com.
Fantastic. Chris, thanks so much for your time. It was really interesting. It was very helpful for me personally, and I learned a lot as always. And I think our audience is really going to enjoy it. So I appreciate your time and the insights.
Well, thanks a lot, Jay. It was great, and hopefully we'll talk again soon.
Absolutely. Looking forward to it. Take care.
Okay.
I hope you enjoyed today's episode. All the show notes and links can be found over at jkimshow.com. Come back often and make sure you subscribe, rate, and review. Don't forget to join us next week for another exciting episode of The J. Kim Show. I'd love to hear your comments. You can find me on Twitter at jkimmer, JAYKIMMER. See you guys next week. This podcast is brought to you by Hack Your Fitness, the high achiever's guide to getting ripped in under 3 hours a week. If you're anything like me, you're probably working a full-time job or jobs and trying to find time to balance family life, social life, and last but not least, fitness. Look, I get it. I'm a full-time investor and entrepreneur myself, and father of two. So how am I able to stay fit year-round without spending hours and hours in the gym killing myself on the cardio machine? After struggling for the last 15 years trying every workout and diet under the sun, I finally designed a system that allows me to achieve and maintain single-digit body fat for life in under 3 hours a week. Cardio not required. Head on over to hackyour.fitness and download my free 13-page guide that teaches you the simple science behind efficient fitness and smart nutrition and gives you everything you need to know to finally take control of your life. That's hackyour.fitness.